Good morning, everyone, and welcome to Morning Market Movers, where we take a look at hot spots in the markets for the day and do some live analysis for day trading. I'm Todd Rich. I'm with Nadex. With me, Brian Caprice from Keep Trading Simple. What are we looking at today? Just, one, notice that I'm coming to you now from Wrigley Field. I came to you for the last couple days from Soldier Field in honor of the Super Bowl. Might as well start getting ready for baseball
Were
season,
the Bears there? Were the Bears there?
The
Did
Bear
they still have a
who?
team?
Bear who?
Yeah.
I hope we keep the Chicago Bears. They might become the Arlington Heights Bears,
Oh,
which would be a strange one. All right, so what are we going to look at? Well, one, we're going to review a little bit of last night. We had UK inflation up to 5.5%, slightly higher than expected. Canadian inflation up to 5.1%, also slightly higher than expected. But we also had retail sales in the U.S. that just came out. Retail sales absolutely blew out expectations, came in at 3.8%. It was 3.3% when you remove the autos, but that it's still just people are spending money, which is really rather interesting when we've got these astronomical inflation rates. People are still spending and buying things,
credit.
which
We have
tells
lots of credit.
it's either credit or cash. People, we'll have to, but we'll take a look at what's going on there. But more importantly, we're going to take a look at what we got coming up today. 10:30 a.m. oil inventory. These are all Eastern time. 10:30, we got oil inventories, so we'll take a look at oil. At 2 p.m., the Fed is going to release their minutes. Last time that actually moved the markets when people got to see what they were talking about. So we'll take a look at equities, knowing that at 10:30 a.m. is oil and 2 p.m. is equities with those Fed minutes. Then we'll also take a quick peek ahead before we wrap it up. At 7:30 this evening, Australia has their unemployment numbers, so we'll take a look at the Aussie Dollar and take a peek at what might be a potential opportunity there. So lots of things today, lots of news, event-driven news. 10:30 oil, 2 p.m. with the Fed minutes, 7:30 this evening with the Aussie unemployment. Before I flip it over to Brian, I do need to share this disclaimer that trading involves risk and may not be appropriate for everyone. That any trading decisions you make are solely your responsibility and at your own risk. And this is an educational session. Please do not construe anything Brian or I say as a buy or sell recommendation. We are doing this for your education purposes. Oh, you know what? I'm not. I'll hang on to that. That's the oil chart. We're definitely gonna take a look at that because we've been calling some interesting levels, and it has created opportunity. All right, Brian, I'm gonna flip it over to you, and
Sure.
let's run through it.
Yeah, I mean, pound CPI year over year, it was already expected to be, a rate that is almost 2.5 times what their kind of annual mandate is. And again, it came in even higher than that 5.5. So I think that what's interesting about the pound is they've already, they were the first major country to do the raise, right? This kind of signifies that, hey, listen, we could potentially, the month over month, the year over year number, it's a big one. We could potentially get another one there. And again, right now it looks like the pound and the dollar are going to be competing to see who's in charge of the carry trade now. So, they've traditionally been the main currency that does it. Pretty interesting. Not seeing a ton of movement. You'd see this and be like, well, wait a second, shouldn't this going crazy? Like, this is high, right? This is higher than expected. Why is the pound
Yeah.
not spiking? Pound's not spiking because of some of the other geopolitical news. I told you I hate geopolitical news. It messes up a lot of stuff. About 3 hours ago, I guess the UK, we mentioned it yesterday, the US and the UK were both, said that, hey, listen, you're not doing NATO, we can have unilateral agreements. And the UK is getting ready to impose, some type, or is talking about imposing some types of sanctions against Russia. And of course, Russia said that they would retaliate, but there are, the UK is already an island nation. They're getting stuff from other people anyway. If it comes from Russia, or comes from the United States, or comes from Europe, or comes from China, somewhere else, they don't care. It doesn't really necessarily matter. Again, anytime there's any type of threat in Europe, the UK is immediately on board. And again, they're one of the, kind of the significant military powers, particularly navies. We mentioned them yesterday. So this is the reason why it's not some bantering back and forth. I mean, the Ukraine situation is still there. All the headlines we've seen, yesterday it was like, yay, it's over. And I warned, watch it. One day there's one thing good, the next day it's one thing bad. Not only have troops not moved, supposedly there's actually more troops heading to the border. So it's kind of like, hey, we're doing this, guys. It's kind of the same thing. It's how much
And
truth do you actually get in the matter? And so it's, all the big perks that we had yesterday, like, yes, the crisis is over. That's the last, the last thing we need. Is it though? Is it? I
It's
mean,
not. No.
it's not. Nobody's seen anything change. And, like I said, there's always another loophole. Like, oh, you can't join NATO because we don't want missiles. Well, great. They could form an agreement with the UK and the United States, and then they don't need NATO because that's 90% of the power of NATO anyway. So, what are you going to say? It's an act of war that they have a peace deal? I mean, come on, really? That may be worth it if NATO's not going to take advantage. And I'll tell you right now, if it comes to that, NATO will lose a lot of power if the UK and the US have to go in and do things by themselves. Don't be surprised if there's major changes in NATO at that point. When the alliance can't move, then individual countries will. So, just one of those things. Then I feel bad for Germany because if anything happens, that pipeline for Germany's gone. Besides that, CAD CPI, we mentioned that, again, it was supposed to be better, came in definitely higher than expected across all the metrics. Supposed to be 0.6 for the month over month, came in at 0.9. So mentioned yesterday, CAD really hasn't done much yet, but they're getting really, really close, right? They're getting really, really close. There was about a 20 pip drop, a drop and raise, but drop in the dollar CAD and raise in the CAD yen. This is good for Canada. Like I said, Canada they're about a month behind us in all of our numbers and things, but they're getting a big spike right now, which is great for them. They should also be looking to raise. So their biggest problem right now is all the protests on the border with mandates. All our protesters here went up there. So once that's taken care of, again, I think within the next month or two, we're going to start hearing about Canadian raises, which will coincide with some of the other things in oil. Now, U.S. retail sales, as Todd mentioned, not only did it make a big rebound, like a rubber band in the other direction, it was 3 times higher, the core numbers, right? So this is one of those scenarios where, all right, is it almost too good that it's bad? So if you think about what's keeping it, all week, Bullard's been saying 100. Everyone's like, no, that's way too much. Too much. I mean, the Ukraine situation supposedly fixed. They agreed that we can, agree to peaceful terms. We know that inflation is broadening. It's getting worse across the board. We saw that in the PPI numbers. Now we know that, hey, listen, retail sales, it's 3 times higher than what the forecast was. There's absolutely no reason. People like Bostic, they're like, yeah, we're not sure yet. 25 is good. Get out of the way. There needs to be action that happens. So again, I think it's almost guaranteed at this point. There's almost no way that it can't be 50. And I actually wouldn't be surprised if today would be the day that they say, hey, we're going to do a 50-50. Today could be the day where they announce that they're doing that. Yeah. I don't think they're going to do 75-25. A 50-50 makes more sense in the markets. It's less disruptive.
All right, I'm going to put my money on 50-25.
Yeah, 50-25 or 50-50. Yeah, it honestly, it's all going to come down to whether the 50 makes any difference whatsoever. If there is absolutely no change and the numbers are still growing,
right,
they need to stop it. Yeah, they need to stop it. But that's going to be the big piece.
I think the 50 is a kickstart. See what happens, and then they make a determination.
Yeah, I don't think it's going to be enough. Right now, it's not in the UK. It's not. Right? Yeah. The UK did a 25-25, and it's not working there yet. And we actually have higher numbers than the UK does.
Yeah, that's at 50. That's at 50 to kickstart it. I would agree. And I said the mark. Everyone kind of knows that's March. That's next month. So.
Yep. But today is the day that we're going to get that information. So I expect it to be a little bit more timid morning today. We do have crude oil inventories coming in, so I think crude oil is important to talk about as well. The forecast is a minus 2.2 down draw right now. The API report overnight, it had less of a down draw, and it actually came in even less than the actual was even less than what the forecast was. So it's already kind of in disagreement with what. And again, remember the API and EIA numbers are different numbers, and they're not always correct. Actually, most times that they are not. But right now, it's showing us there's a little bit of a supply. The forecast is a little bit off. So I think oil is where you wanted to start.
Yeah, because that's 10:30. I mean, let's take a look here.
That's the first one. Yeah. So here's where.
Yeah, the 35-1 setup going into that.
Yeah, here's where we were yesterday, and we mentioned that we'd already pushed down the 61. I didn't really like any levels until we had this one that was bordered by the 78.6. We had the drawn here from yesterday. It came down, grabbed it, and did nothing but go higher. So where we are right now, we're kind of at an interesting point. If you do the the high to low down draw, we're sitting right around the 50. There is a small level right up there, right around that 93.63 level. But knowing that it's forecast to be a down draw and the Europeans have set it up, normally I'd say, hey, listen, take this short. But again, the Russia situation is not solved. That's why we saw all this go down yesterday. I mentioned I think we can get back up to that 95.50 level this week. We're at basically $2 short. We have a miss where API is saying listen, it's not as bad as what you think. What happens if it comes in more than this -2?
Right.
That could be the catalyst we get to drive back up again into that higher level. So, it is bouncing in and it is chopped through. I mean, it's hit the 50 once, it's hit it again, and now it's pushing through it again. So, any fib trader that's using the 50 on this one has got to be really, really concerned because
It's
again,
gonna push higher.
you're
Yeah.
building up buyers, buyers, buyers here, right? And it keeps punching these sellers. So yeah, there are sellers there, but we're getting to a point where there's not a whole lot of sellers visible on the chart. So, the way to play this one is going to be the 10, the 10, 5, and 1. I'm sorry, the 35 and 1. Really at 10 o'clock this morning, kind of see what the retail trader is looking at. Right now, seeing inflation higher, seeing natural gas up 5%, seeing oil up 1.37%. It's got more room to run. It definitely can go further. And again, with the, not only we're not pulling troops away, but, aerial photography spotting says that they actually are sending more troops to the border.
Yeah.
Again, that's one of those catalysts that start sending this even higher. Because remember, we talked about it. What was it? 200 million every day they're making or something like that?
And to top it off, the U.S. did go to Saudi Arabia, asked those OPEC in the Middle East to start pumping out more oil, and they said no.
That
well,
actually they can't because of the OPEC Plus agreement. So
they said no.
Unfortunately,
we're sticking with Russia on this one. Yeah.
Well, they can't. I mean, being that part, the oil cartel there, they can't. They have an agreement. Because other countries, remember that was the drama a couple months ago, where certain countries wanted to raise and other countries like, no, it's not stable enough yet because they knew how much money they were missing out on.
Yeah.
So, yep. And meanwhile, the Ukraine or the Iran is still like, hey, don't forget about us. We have lots.
Yeah. So at 10 o'clock, start looking at those 30-minute charts.
Yep.
As you get closer, you could to the 10:30 number, drop them down to 5, and then going into the number, the 1-minute charts. See what you got going on there. That's at 10:30 a.m. this morning. Now, 2 p.m., we're going to have the Fed minutes. Let's just take a look at some of the equity because that's where you'll see it.
Yeah, they're all starting to accelerate down now. Yeah, when Todd and I got on about 15 minutes ago to start doing prep for today's show, the indices are basically flat. Russell was up just a little bit. Everything, I think the ES was down 0.08. They're all starting to accelerate now with that retail sales number. You may say, well, wait a second. That's awesome. People are spending money. That's great for the economy. Well, yes, but no. It's the good as bad. Now, I mean, Russell was up like it was like 0.25%. Now it's down 0.4. So everything is starting to accelerate to the downside. It kind of comes back into play we were talking about yesterday, seeing breaks and kind of overtaking this. It's absolutely justified. Yeah, it's great that the retail sales numbers are that high, but literally there's absolutely no excuses at this point for them to be like, yeah, we can't raise the labor situation. It doesn't matter what excuse they throw out. There's absolutely none that work at this point. With the numbers, the numbers are proof. Everybody knows what's coming, and it's like, hey, you know what? Let's fund. And understand too, part of this spending is knowing that everything's about to get crazy. When they start raising rates, things do go up in price. So it's kind of one of those like, hey, let's do that. Like home refis. If they know rates are going to go up, everybody refis now because they don't want to get a higher one, right? Once rates start going up, it's not great to be a mortgage person because you're not getting any refis at that point. That's kind of what we're seeing right here. So I would say kind of the same scenario. Still have the racetrack. Yesterday, literally, we just did this tennis match. It was like ding, 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 bouncing back and forth. We did break higher out of it earlier today with that 3 o'clock, that 3 o'clock spike again. And then since that time, it's pushing back down again. And now the retail sales numbers is in, it's really kind of driving it. So I like it more for shorts today. And again, justifiable. The market is not really fully adjusted. And again, yesterday it was kind of like, yay, Ukraine is fixed. But Ukraine, what's happening in the Ukraine doesn't necessarily affect how much money we're spending on things. It doesn't affect our inflation. It doesn't affect anything really, in our economy. So at the end of the day, when we look back at what factors here we can control interest rates. With blowing your retail sales out, they have absolutely zero excuses at this point. I guess if the unemployment comes in this week and like 500,000 people lost their jobs, but could it happen? Sure. Is it possible or is it probable? No. Not zero chance, basically. It could be 99.9 because I guess there's that one slim chance that there's a magical thing that we can't see. But reality is no. So I would say ES has the same setup that we talked about yesterday. Breakthrough again, 44.37.75. Look for some type of a confirmation. I'd like to see it base in here before the retail trader gets in. Like I said, right now it's kind of breaking below Globex lows, so you will have traders getting in there short at the open. to try to advantage of that. But again, remember, this is where bear traps happen a lot of times when you see, oh, look, there's a support zone right here, right? Oh, it's
Right.
breaking out of that high. This is like a very, very easy trap because everyone's like, oh, look at this, I see it. This is the trap, okay? Particularly at the open and especially with the news that we have. So just be careful with the ES. NQ, kind of the same thing. Yesterday we had 2 attempts. It drove and made it about 2/3 of the way through and then came up and literally just died. It it flatlined, and then again, Europeans popped it up and then kind of reestablished the same base trade in there. So same scenario. I think NQ is able to come down.
Yeah.
This one didn't make it to what?
Yeah, it almost looks like the same chart.
Yeah, this one was triggered. I actually liked NQ the most yesterday. It made it to about 2/3 of the way through, but 12 o'clock, and then it kind of ended. So most likely you guys would have gotten whether stopped out at break even or banked a little bit on this one. I still think it's able to get down all the way back down to 14,265 if the negativity stays there today. Right now, the NQ is leading the way. YM also the same thing, and it did the same bouncing, drop down. It's the same thing. And then the Europeans at 3 o'clock in the morning popped it and then have done nothing but kind of stabilize it and then based in it and pulled back to go lower. So I think we're still looking for 34,500 in the YM today. It's about 250-point drop because of, in preparation for FOMC. And then Russell, kind of the same scenario. Russell didn't break. Russell was the one that went higher yesterday, but now you're starting to see it kind of turn and roll back to the downside. So we can remove this. Whoops. We can take that one off now. This one's still here. Remember, if this, then that. I will say that it does have kind of a level that's formed, really kind of this basic right in here, right? So, do I like this one versus the ES? No. There's a little hiccup here, hiccup here, hiccup here, and then obviously this level, but I'm not concerned about this one for the next time. So, yeah, I'd say break a 2040, but this one's going to have to grow some legs and starting to move to the downside a bit more. Again, Russell should be the one hurt the most today, so I was kind of surprised that it was up for the morning. But yeah, everything right now is red, and you would say, wait, that doesn't make any sense. This number is awesome. Yeah,
it is a great.
It's so number. Awesome that they're going to raise rates, definitely more than what businesses would like. So,
all right. So the last thing we wanted to take a quick peek at is the Aussie dollar with the 7:30 unemployment numbers. Is there anything we're looking at here for a setup for tonight at 7:30 p.m.?
Yeah. So, yesterday for my group, I kind of drew this we have this channel kind of bouncing back and forth. If I extended the channel, farther up, you can see that it is still in that same kind of range, kind of going sideways. We're kind of back in the middle of it right now. News is here. So, I mean, the big thing we need for the analysis on this one right now is we need the FOMC notes. Okay. If it is very, very strong dollar, this is going to shoot down. And kind of the way that this is setting up in my eyes is, if we can get the FOMC notes to shoot this thing way down with dollar strength, now all of a sudden we have a racetrack, an ability to do some type of like a parabolic retracement type move. It may be something along these lines, right? It may actually be even a little bit lower, right? It may be down to here, to say that, could that go down? Sure, it could. I don't know where it's going to be for FOMC. It's going to depend on the open. But I would assume that we're going to have dollar strength come in. I'd be very, very surprised if it's dollar weakness, but then the scenario would flip on its head the other direction. If we have any spike higher, I think this level is an important level to look out for. The 70s and 97 down below is also a level. I really want to see some type of a spike in this one, and then play the retracement of it using the late night news. Because remember, you're going to see this big spike, and everyone's going to be reacting to it at like 3 o'clock. It's like, oh my god! And then it's like dinner time, and everything slows down. The Aussie releases at 7:30, so it's not super late. That's how we'll be able to get a spike and then kind of like a retest of it. CN is very, very similar as well. It's been bouncing between the two levels that we marked yesterday. The 83.10, we talked about it. Huge candle down when we had some sellers. That got triggered at 3:30 this morning and then kind of retested again. So you would have been able to do actually a smaller level right there if you wanted to. Kind of same thinking. This one is going to be a little bit more pure. FOMC will affect it a little bit because of the yen, obviously. But there's a lot of small levels in here. We have these two yellow ones. There could be a case made because we're so far away right now. If we have any type of a spike, there could be another level opportunity down here for news. You can see as we get closer and closer to this line, it will help us a little bit more. I'm hoping we don't end up kind of smack here in the middle. There's buyers here, but I don't love them. But I think the 83 level, let's see. I think either of these three levels is probably decent. And a lot of it's going to, again, the only movement we're going to see in this one right now is going to be yen-based, which is going to be a proxy play. So, those are what I look for. Again, look for a 30-minute pullback right before news at 7 o'clock tonight. And again, that releases at 7:30. Employment change, unemployment rate. So,
yep. And I dropped those links in so you can track those numbers as well if you need a little help with that. With that, any questions for Nadex, please email us, customer service at nadex.com. You got any questions for Brian? You can also email Brian. His email is down there, support at keeptradingsimple.com. And you can also email me. I dropped my email in there. What did we talk about today? I mean, it was a lot. We went a little long today. Yes, we had the UK and Canadian inflation last night, both coming in slightly above expectations. We had those U.S. retail sales, absolutely blew them out, but you go, wow, that's going to be great for the markets. However, that is also
Oh,
going to put some pressure on the Fed to have to
and
do something here in
guys,
March.
15 minutes ago, right after we started, Blinken came out. It says there's no evidence of Russia pulling back. And actually, Blinken says we continue to see critical Russian units moving towards the border.
Right.
That came out
The
about
exact
15 minutes
opposite.
ago after we had started. So, yeah, that'll
Yeah.
definitely weigh on the markets today as well. Another factor on there.
And so, and then, which is also, yeah, that's weighing on the markets, kind of eating up those retail sales.
Yep.
Now, what do we have to look forward to today? We talked about oil. Oil inventories 10:30 a.m. this morning. Although that will also be impacted by any geopolitical news that comes out of Russia-Ukraine crisis. 2 p.m. Fed minutes are being released. We might see some action in the equity markets there when we get a little bit more of a glimpse of what they were discussing and what we might expect to see in terms of interest rate rises. So 2 p.m. Eastern. And then we lastly went through the Aussie dollar. They got their unemployment 7:30 this evening. So if you wanted to look for some potential opportunities, there might be something there.
Mm-hmm.
Thank you so much, everyone, for joining us. If you like what we're doing, please drop us in a like. We always appreciate that. Brian and I will be back tomorrow morning. Until then, good luck in the markets.